Hello investors, I'm Stuart Kruse and welcome to Kruse Asset Management's Trading Tuesday. On Tuesday we're going to talk about the trades that we make from our quantitative portfolios. Usually the first week we do our QVP, which is our quantitative large cap value portfolio. It's a systematic strategy where we look at fundamental characteristics of stocks, and these characteristics have tended to lead towards outperformance in the past, so we're going to buy stocks with those same characteristics today. Last month, we talked about Lowe's versus Home Depot. So how do we do after only a month? Well, let's check it out. Let's look at our charts, at white charts. Right now, we have up on the board the SPYs, which is in purple. And after a month, SPYs are flat. Home Depot, after a month, which is in blue, is up just under 1%. And we said be long Lowe's versus Home Depot, and that's up a little over 4%. So it has significantly outperformed the market and its rival Home Depot. So far, so good. The systematic strategy is working. And it's based basically on buying $1 of earnings at a discount versus instead of buying $1 of earnings, that's expensive. That's what Warren Buffett would say. So that's what we do, and that's what the numbers say you should do too. So that was last month. We still have this trade on now. So let's take a look at what we want to do this month. And we haven't placed this trade yet. We're going to put these in tomorrow. But this is one of the trades. This is going to be one of the buys. We're going to buy Synchrony Financial. This was GE Capital's retail financial business. Here's the chart. You can see up here, revenue quarter over quarter is actually down 17%, but the price to sales ratio is basically at 1. PE ratio is at 8. Free cash flow at $2.3 billion, even though its revenue is $16 billion, and it's only a $16 billion company is making $2 billion a quarter. ROE 16%. Dividend yield 3. These are all great things. So you're basically buying $1 of earnings pretty cheap, even though we had a little top line sales decline. So let's take a look a little bit deeper. Here we have the spiders in purple, and year to date, they're actually up 3.5%, and Synchrony is down 24%. And in my world, that's a good thing. We didn't own it as it was down 24%, but we're going to buy it now because hopefully it will close the gap because you'll be able to buy $1 of earnings at a discount. All right. And if we're going to look at, as I said, the PE ratio was trading at, looks like 8. And the price to sales has also kind of increased a little bit, but it's also at 1. So, and well down from here, it was up in the, it looks like when my chart catches up with me, 1.3, 1.4. So that's well off of its price to sales, so down 25%. So certainly not at overextended. And what are we going to sell instead of that? Well, we're going to sell Clorox. And if we look at the PE ratio of Clorox relative to Synchrony Financial, it's, what's that, 3 times as big. The price to sales is 4 times. Now, of course, these are completely different companies. Financials tend to trade at a much more modest ratio, but still, looking at a PE of 28 for Clorox, that's pretty overextended, I would say. And again, if we take off these price to book and PE ratios and look at how this is done year to date, if you recall, Synchrony has underperformed, Clorox has outperformed, and that's what we want to do. We want to take the profits off the table when a stock has gotten extensive and trade that into buying $1 of earnings at a discount so that it can appreciate over time. All right, so this is Stuart Kruse with a report and a look back on our Home Depot and Lowe's trade, which so far so good, and then a new trade, a buy and a sell of Synchrony Financial and a sell of Clorox coming tomorrow. Okay, so that's our quantitative value portfolio. If you want more information, please feel free to reach out to me and we can explain how this works in more detail. There's probably a dozen or so characteristics that we use in order to evaluate companies and stocks. I often put up PE and price to sales up here, but it's just 2 of, let's say, 12 to 15 characteristics that we tend to use. All right, and again, Stuart Kruse with Kruse Asset Management, and don't forget to invest with the odds in your favor.